All right, let's talk more about the Fed and all of those ongoing assumptions that we will see a rate cut later this month. Joining us now from Tampa to discuss is Rebecca Walser, friend of the program, president of Walser Wealth Management. Hi, Rebecca.
Hi, good to be with you.
Well, so let's talk about what we're seeing with markets right now, still slowing. And I guess I wonder how long you think this will go on for, especially since everyone does assume we'll get a rate cut. You might think that we'd be seeing more movement in stocks.
Yeah, I mean, I think that obviously the June jobs numbers, 335,000 people went back into the labor force. That's why the unemployment number ticked up, 0.1%. But, basically 224,000 jobs added, which shows us that, May was truly an outlier. It was a blip, more seasonal or than anything else. And it does not bode well for those people that do want a rate cut, which is why you're seeing the market, pull back a little bit today, realizing that this is being digested and saying, okay, we're not going to get 50 basis points like we thought we'd be lucky. I think that the market will be lucky to get 25 basis points. I'm not a huge, one to believe in cutting right now. I think that, the cut would be better served if it waits until we figure out if we're going to get a China deal or not, because that is when the market's going to need a rate cut if we don't get a China deal.
Yeah, it is interesting, isn't it? The ongoing debate about which has had the larger impact on stocks really for the last year, the China trade war and sort of good news, bad news, optimistic statement we hear, pessimistic statement versus the Fed and the Fed watching. I mean, I'm sure you heard our last discussion with our colleague around the politics right now and President Trump questioning Powell. What do you make of sort of the ongoing agita over President Trump versus Jay Powell?
It's really interesting. I really feel like Powell went ahead with the December rate cut when it wasn't necessary, just to show his independence, because President Trump had put so much pressure on. And I think that President Trump really should take Jay Powell's not wanting to cut rates necessarily, or being very cautious about it, as confidence in his economy, Trump's economy. This is Trump's economy. Let's be very clear. If we compare Obama's growth GDP numbers quarterly to Trump's, this is definitely the Trump economy with his tax cut, his deregulation. So Powell has a lot of confidence in Trump's economy. Obviously, it's withstood 7 interest rate hikes since Trump has been inaugurated. That's unbelievable, since, Obama had nothing but, quantitative easing and, monetary policy that was helpful to him. So this is just showing that Powell has confidence in this economy. And I think that's a compliment to President Trump, even though, obviously President Trump wants the Fed to cut rates so that he can continue on his trade, basically sanctions and still not have this global slowdown that could be caused eventually because of it. And I understand that position. But at the same time, if we don't get a trade deal, that's when we're really going to need the Fed to step up and give us a rate cut.
Absolutely. All right, Rebecca Walser, thanks so much. Always good to check in with you.
Thank you.
Thanks.
Thank you.